Hello everybody, welcome to a new series. It's called Technical Thursday. I might change it to Technical Tuesday just to see what people's thoughts are, of course. But yeah, today, as you can see, we are looking at basics of market structure. So market structure being like uptrends and downtrends and breaker structures and so forth. And then of course, if you have any other recommend in terms of what type of videos, please let me know, of course. But yeah, for now, let's get straight into it and sort of start off with the absolute basics here. So, firstly, obviously, the main points here are as follows. So let me just move this out of here. Let me just decrease this. So the main points you must kind of follow on the majority of times is in an uptrend, you only look to buy, and obviously vice versa in a downtrend. Obviously this is real basic stuff. I'll start with the basics, and then as this series progresses, we can always just add more and more stuff into it. But in a downtrend, you only look to... This seems pretty obvious, but I've seen a lot of people... Oh, there we go. I thought I didn't say for a second. We've seen a lot of people, right, where they kind of buy at the sort of demand zones or whatever, and then they'll try and sell the sell as the pullback and then try and buy it on the way up. And you may have noticed majority of the time you're taking more losses trying to sell the top here than you are buying the bottoms or near the bottoms, because you're not always going to get it pinpoint at the bottom, but as long as you kind of ride the wave upwards, you should be good. But you've probably noticed you always try and take the most losses where, for example, it might have come into a big area of interest over here on the left. You look to sell it, but then it keeps going higher and then it pulls back slightly. And then you've taken that unnecessary loss. So that's the rules that I generally would follow. Would be in an uptrend, you only look to buy, and in a downtrend, you only look to sell. Now, in addition to that, I personally will only look to buy at, at least 50 pullback. So again, it's a discount. You're trying to sort of get that good opportunity to sort of buy it at. For example, we can probably infer here that this is not a 50% pullback. Similarly here, that's not 50%. So even if it goes higher, it's a bit unfortunate. It is what it is. But then we'll look at breaker structures on the way up to see, is this level here the level it's moving up from? Because again, as you all know, nobody really knows exactly where the markets are going to turn. But that's why you use market structure to give you an idea on what, is that region an actual good region or not. So very, very simply as well, this is known as a higher high and this is known as a higher low. This is important to remember because once you move on to the breaker structure bit and just in not too long now, it's important to remember this. So this is then high because, as I'm sure you can probably understand, that this high is higher than this high over here. This high here is higher than this high, and vice versa. This will then be called a higher low because this higher low is higher than this low here, if that makes sense. So high, high, low, high, high. So an uptrend is making that, and vice versa on a downtrend, it's making a lower high here, high, lower low, vice versa, etc., etc., etc. Right? Because this high is lower than this high, this low is lower than this low. So very, very simple stuff here, and it's important to remember. So if we do something like this, where we are trading upwards, we're trading upwards, and then we make this high low here, that's the higher high, right? Because that high has to be higher than the high. But if we do something like this, is this a higher high now? No, because it's not higher than this high, if that makes sense. Is this a higher low? No, because a high low is only a higher low when there's a high high above it. So if it does something like this and then it goes higher, then this will be the higher low. And it's important to note that the last high low or last lower high in a downtrend, but we're looking at an uptrend in this example, so last higher low in uptrend is the most important, because why? A breaker structure only occurs when the high low is breached. So high low is then broken. Now this then is starting to show a breaker structure, which we'll get into in just a moment. So it's important to know in an uptrend, the high low is the most important thing. And in a downtrend, the lower high is the most important thing, because once that's broke, that then gives the market or people an idea that now markets might start to reverse and now go from a downtrend to an uptrend. So with that in mind, let's have a little look at what a break of structure is. So let's just move over. And over there. Like, let's say, for example, the markets is, just trying to think how I'm going to do this, where it's trending lower. Oh, very nice shallow pullbacks. We then make another low. And then what we see is the lower high being starting to broken. So it does stuff like this. And then it gets broken. And what's important here is the candle closes above the level. Because sometimes you're going to see where it does something like this. And then the candle doesn't actually close below it. It does something like that. We then see a big wick through it. It does something like that. And then people say, oh, that's a break of structure. Well, a break of structure only is a break of structure if the candle closes above that level, because it shows that there's demand still above this level. This would suggest that markets wouldn't want to push it above this higher because there's been selling pressure all throughout this period. And what would that look like on the lower time frame? Well, if you then zoom in onto the lower time frame, what this period of this wick would look like is just very, very lower time frame candles like this. That's what it looked like on the lower time frame. But then if you go slightly higher, it will look like a wick. So it would look like that on a lower time frame, and that would suggest that there's been a lot of selling pressure, of this high. So maybe markets don't want to reverse it from there just yet. Now, what do we then wait for after a break of structure? Well, essentially what you do is you do something like this, where you mark at the significant highs. In this example, we're selling, so the lower high is going to be the most significant. We then trade above it. What you'll then do is, we could do this in another video. I have made a video called The Only Technical Video You Would Ever Need to Use. It should be on the YouTube somewhere. I'll link it at the top right for you to go and watch it. But what you do is then look for a demand candle because you're looking to buy. And then you'll look for longs, and then what you could target is TP1 there or there or there, whatever your risk parameter is. So that's what you should ideally be doing on a higher time frame, is marking out the significant highs or knowing where the significant highs are in a trend. So for example, if we look at a real chart now, because it's all good, well and good seeing it on lines, but seeing it on the chart is different. So for example, go on the high time frame, so we're on the daily time frame at the moment. And then we zoom down. If I just do this, it'll make it look like a lot easier. So what is the most significant part of this trend? Well, going from the video, from the sort of line chart here, you can make this into a line chart if you wish to do that. But you can see the most significant part of the down is the lower high, isn't it? This lower high here, make the lower low. If we break above there, we could potentially go a little bit higher. But this is all warranted by if the fundamentals suggest it should go higher at that point. So for example, right now on the DXY, if we just go to the line chart, you can see that the last significant high is this one because it made the lower low here. This would then be the next one above it because this then created the lower low here. So with that in mind, if we close above these levels here, go back onto the candles, we close above sort of this high here, that could confirm that the trend might go a little bit higher, and then it will then eventually go lower because you'll be bearish the dollar anyway on a fundamental perspective. But this will just give us a guidance that there could be some sort of little bit more room to run before initially moving lower. If we go on the hourly time frame, it may look a bit better, give a bit more clarity on that. Where if we look on the downtrend here, so you only want to be looking for sells, lower high, lower low. So this lower high then got breached. So where am I? Horizontal. Lower high got breached here. We closed above it on the hourly, as you can see. We then pulled back. Relatively shallow pullback. Guess we'll just look at the fib quickly. Low to the higher. Okay, 61. I'll be happy with that then. 61% pullback. Where did we come into? Any demand zones? Initially, it doesn't look like it. Yeah, it doesn't really look like we came into any demand zones. Could have just been these prior highs, looking at it in hindsight. And then we came in higher. And then as you can see, this then reacted out of this 2-hour demand zone here, this move right here. And then it continued on its upward journey until we start to see a break of structure. And you can see structure here, if I just move it onto a line chart, would be higher highs and higher lows, isn't it? So you can see how low, high, high, high. That high was then broken here. You could have, I guess, done it there, but that's quite an aggressive break of structure. But this was the sort of high time frame, 1 hour, 4 hour ish break a structure, you can always go on. This is the like, you can do this on all time frames. But then what we saw, you can see, is this high, the lows there, higher high, higher low, very shallow pull, very shallow, very shallow, and we're up to this new move here. And throughout this period, because you saw no break of structure, you was only looking for demand zones, only looking for demand zones, only looking for demand zones, because it's a bit difficult to predict that there's going to be a sell-off only if market wants to start selling off. You don't know if that's going to happen until it happens, right? So all you do is you just follow the trend until it then goes against you. And once it goes against you, you may have taken a little minor loss, but that's fine. You may have taken a bit of a minor loss. It is what it is. And then you just know that, okay, breaker structures occurred. It still makes sense fundamentally. Yes, it does. Okay, now let's start getting back into some more sells. Then you just rinse and repeat the same process. So for example, here, still an uptrend until it breaches this low here, because that's the high time frame move. This is very shallow, very choppy price action. Well, we see that break structure there. We see a little bit of a pullback, supply zone, and then you look to sell it off, if that makes sense. Hopefully it does. That's the basics of market structure. But if we go on the candles, you can now see it's a lot more, it looks a lot more complicated, but you can always just move over to the line chart just to see where the significant lows are being created. Hopefully that gives you a bit of a good guidance on sort of market structure a bit. We can look at some more examples as well. So for example, what could be a good one? GU, I guess. I think GU is actually traded a bit lower than what we actually, it's kind of around our region. So for example, candle, marking out the significant highs here, just on the daily time frame. And then here. So you can see that market structure is still bullish until we break below this low, because this low created this high. This then created this high. This higher low then created this high. And you can see how markets kind of struggled to close below this low. Obviously, this was a gap, so it's a little bit different. Market gapped that way, so you kind of just disregard it to some degree. But if I just do this, there we go. So you can see how market struggled to close the low there, and then it created the high here, and then created a new high there. Now that we're very close to actually breaking this structure, if we see a closer below this low here, because this low down here created this high up here, if we see that occur, which we're not really seeing too much at the moment, then we could suggest that, okay, maybe we'll just come a little bit lower before initially going back up again. So for example, we might close the low there, somewhere there, and then we pull back slightly, and then it sells off, and then you just do the same again, because it still makes sense to buy GU on a fundamental perspective, largely because of the US dollar. Then you'd know that you'll only be looking for demand candles at this point. This is time frame specific though. So if you are trading the lower time frame, obviously you can be a little bit more aggressive, because each trend will have their own trend within it. So you have to, I have made a video on it actually, I think I have. If I haven't, please let me know and then I'll quickly upload it. But I have made a video on it on different types of trends where you will have a trend within a trend. So for example, a good way of looking at it would be, for just looking at hourly, in this move here, so let's just look at a move lower. In this move here, there's going to be heights, a very lower, much lower time frame than what we are on at. So that could be like a 15-minute sort of move. It could be like a 5-minute. Down here as well, there's going to be a time frame specific trend. So what you have to know, identify, is what type of trend you're in, i.e., are you uptrend or downtrend? And number two, are you trading it on the time frame that makes the sense for that trend? So for example here, let's say this was the 1 hour time frame move above, then you generally want to be holding that for a 1 hour sort of time frame move. So you could take profit there or there. You don't generally want to hold it all the way onto the high time frame leg unless you move from the higher time frame to the lower time frame. This is not an entry point video. Like I said, I have made a video on that, but you have to understand what type of leg you're in. So if you're trading a 5-minute here, this is going to be 5-minute legs, isn't it? A leg, 5-minute pullback, leg, fallback, pullback, etc., etc., etc. And then understand that at some point, these buys that you're buying here are going to run out, because the high time frame above the 5-minute could be like obviously like the 1 hour, for example, is going lower still. So now you think, okay, I don't want to be buying it anymore. Maybe I can wait for a 5-minute breaker structure. So this high low here, for example, because this made the high high. This is the high low, high low, high low. This then could have got broken, and then you look to sell it on the 5 minute. You could do that, absolutely, but you just got to remember what sort of time frame you're trading in, and that's important. So that's just a live example of the DXY. Another one, like I said, with GU, is another one where we're looking for buyers because it makes sense fundamentally, fine. Where is the breaker structure going to occur for the buyers? Because we don't look for buyers out of a zone and we just buy it because it makes sense, because the lower time frame is still very bearish. We're going to wait for price action to suggest that buying is now going to occur, i.e. break of structure. So where's the breaker structure here? Well, you can see clearly it's right here. So if we do this and then we break structure, that's now when I think, okay, this high time frame, trend is still in place. Then we wait for the break, the pullback. Then you look for demand candles to go upwards again. Until you see that breaker structure, you don't enter. So if you don't see any breaker structure, you're not looking for buys yet until you see that. Vice versa. So if I remember how to invert it, there we go. So for me, it would be that Command or Alt and I. If you're looking for sell it in this example, you're only going to wait for the breaker structure once it breaks that high low, because this high low created a higher high here. It may have come into a high time frame zone. Let's say that was a demand zone, for example. You don't look to sell it until you see the breaker structure occur. Then you wait for the pullback, because there's always going to be pullbacks, and that's when you get in. Hopefully that's a good little summary on understanding what trend you're in. But the most important thing, and the most important thing to take away from today is, if we go on the daily time frame, there we go. If my text is still there, there we go. Is as follows. In an uptrend, you only look to buy. So you notice how in some of these breaker structure sections, we're only looking to buy once structure has gone upwards. Because in this scenario, it may have come into a high time frame zone, that's fine. But the lower time frame is still very bearish. So until the lower time frame turns bullish is when you now not look to start to get in. And obviously vice versa, you're looking to sell it only when the high low is broken. That's when it moves from an uptrend on the lower time frame to a downtrend on the lower time frame. But then you can also see it's now just following the high time frame leg. So if this moves down like this, like that, it will just move. It will just look like that move here, that move here. It will just look like that on the high time frame, but on the lower time frame, it will look like this. So it's understanding what sort of part of the trend you're in as well. So yeah, that is a very quick and very basic summary on market structure. Please, please, please don't look for buyers when you're looking for, when the markets are clearly selling off, and vice versa. Do not look to sell when the trend is clearly bullish. This is when you take the most losses. And here is just some very, very, very simple rules for you to follow. But yeah, apart from that, everybody, have a good rest of your day, and I'll see you in the next Technical Thursday video.